Welcome to the Lynette Zang YouTube channel. I'm Lynette Zang. Here, we support community and sound money globally. So to help us launch this channel, please make sure that you hit that subscribe button and share it with everybody you know. Today, we're going to talk about, oh gosh, why should I take my money out of the stock market? It's doing so well. But what we all know is that it's a lie on top of a lie. And how many times can you be lied to and you do not know the truth? So I'm going to show you some truth today. Let's just begin, because this really is all about risk transfer. We are at the end of this currency's life cycle. And so all of the gains have been transferred to the top. We know the income and wealth inequality. And now the losses that are looming must be transferred to the public so that those that are in power can stay in power. But I don't think that that's the way that it should go. So let's look at this risk transfer mechanism in these high stock markets. Because for 2024, they're counting on a buyback revival. You know, it used to be illegal for buybacks before, I think it was 95. I could be off on my dates a little bit. But then they changed the rules to enable that, and that's one way of legal manipulation to make the stock market look much better than they are. And so in 2024, with these very, very lofty valuations, not to mention the fact that they're all fiat money products, they are counting on this buyback, the buybacks to really support the markets and keep you ignorant of what's really happening underneath. Stock buybacks by Bank of America corporate clients have been above seasonal levels for 11 straight weeks, the firm analyst said in a note earlier this week. But why does that matter? Well, because corporate buybacks can help stock performance in several ways. By reducing the number of shares outstanding, buybacks make earnings and other per-share metrics that are commonly used in valuing equities look more robust. In other words, stock buybacks can make things look better than they really are. That's that whole tip of the iceberg and what's underneath it that we're talking about. This is what's underneath it. Because what are they doing to utilize these buybacks, to buy back their shares? Many companies are taking on debt. So they're shifting from equity, retiring, reducing their number of shares on there, and the company is taking on debt at the same time. So the share price goes up, but what you're not seeing is all the additional debt that's being taken on. So I thought that we could take a look at what that really looks like and use a stock that everybody is aware of. Okay, non-financial corporate debt. Can you see that how much that has grown and how much more rapidly that debt is coming on, even in this high interest rate environment? So let's just look at Apple, because of course everybody knows Apple. They're familiar with them. The company has used debt over the past decade to reduce its share count drastically. They would never hide the truth from you, do you think? You cannot create wealth with debt. You only create the semblance of wealth with debt until you can't. Think back to what happened with all that real estate in 2008. You had people making $50,000 a year taking out $500,000 mortgages that they really couldn't afford, and then buying, 20 houses, right? So what it looked like they were doing really well, but when that market imploded, it was devastating for a lot of people. The other thing that we've talked about quite a bit, and I want to bring this to your attention, is the concentration in these mutual funds and these ETFs. So it's just a few stocks that are driving and making all of these stock market gains look like they're actually something. Apple is on the very top, but you can certainly see Apple, Microsoft, Nvidia, Amazon, Meta, formerly known as Facebook, Alphabet, A&C, which is Google, Tesla, Broadcom, Eli Lilly, right? These are the top 10 holdings in almost all mutual funds and ETFs. Certainly not all of them, but a lion's share of them. So when they go up, it makes everything look like it's going up, but should their overvalued levels implode, well, then you got a different story. So I want you to think about this. You need to pay attention to this concentration. Let's just take a few of them. I don't have to go through all of them. They all look pretty much the same. So this is Apple stock, and you can see how much that has gone up. But you can also see this is the volume of shares traded, that has gone down at the same time that the stock has gone up, because they've used buybacks to reduce the number of shares out there. So that's one thing you want to pay attention to. Apple's huge buybacks matter as much as to investors as iPhones and Macs. So this is one way that the rich certainly get richer. Let's see. Apple has spent $573 billion on repurchases since 2012. That's a pretty substantial amount. But let's look under the surface as well, because these are their repurchase share authorizations. This is 21, this is 22, 23 hasn't come out yet. Okay, but what they did, but we'll take a look at that when it does as well. The firm's buying has been relatively steady despite stock market volatility or business cycles, because they want to manage, this is perception management, they want to manage what you think about the stock. Do you mind buying it? Look at how high it is. I mean, very lofty levels. Let's look at the insiders for just a minute. Now, what I want to point out in this is 3 months. So insiders, so that is those are the corporate executives, those at the top, right? They've only just started buying the stock in the last 3 months. For the last 12 months, well, prior to the last 3 months, that would be 0. So insiders in Apple have only just begun to buy the shares. As the shares have moved up and stayed in that high range, they've sold quite a lot of shares. Over 12 months, 2,277,268 shares. This is insiders. These are the people that know what's going on with the company. In the last 3 months, well, while they bought 123,448 shares, insiders sold 252,409. But the repurchase program has hidden all of this. So in the last 12 months, again, even taking into account the purchases, which haven't been that great, 2,153,820 shares of Apple have been sold by insiders, those that are running the company. Want to go out and buy Apple? What do you think? I mean, after all, they did buy a few shares just the last 3 months. So this is what the public sees. The public doesn't see this. They probably don't pay a whole lot of attention to this, but they look at the stock price. You open your 401k, it doesn't look so bad, right? All right, let's take a look at Microsoft shares, right? And you can see those are actually making new highs. These are their share buybacks going all the way back to 2001. And you can see how that has, is that 2001 or 2008? I think it's 2005. Thank you very much. Okay, it's hard to see. It's little. Maybe I need new glasses. But anyway, so you can see they have a really great program for buying back their shares, and they certainly did quite a bit of it in 22 and 23, and their shares are making new highs. This is what you see. This is what you and I see and the masses see. What have the insiders been doing? Let's take a look at that. And by the way, all of these links you have access to, right? You're posting all of the links. So you can go in, and I would suggest that you actually pull this one. This is from the NASDAQ, because you can look at any stock and see what the insiders are doing over 3 months and over 12 months. Oh, wow. The number of shares bought, wow, were only 1,841. But they sold in the last 3 months 106,281. Now that has sped up from the last 12 months, but in total over the last 12 months, you had a record in the last 3 months especially. This is not a record, but 104,446 shares that have been sold by insiders. The key in here is what's going on over the last 3 months that has ramped up insider selling. Well, it could certainly be the new height of the stock market, but there could be a number of reasons. What do they know that you don't? Yeah, they're selling into that share price rally. They are transferring that risk to the public. That's how they do this. You see this, and they take advantage of it. It's the way risk transfer works. We'll do NVIDIA. NVIDIA's $25 billion buyback plan results lift stock to a record high. Woody hooty, Rudy Manooty. Are you kidding me? Here's NVIDIA stock shares, and look at how high they are. Yep, although there is a gap. I'll talk about that's for another day. But there is a gap, so the stock price is going to go back down and fill that gap at some point. Okay, let's look at what the insiders are doing. Over the last 3 months and 12 months, let's just make this simple. Over the last 12 months, 1,358,684 shares of NVIDIA have been sold by insiders. There you go. Boom. It's so simple. What do you want to know? Again, you have the link. Go in and look. But can you see how Wall Street transfers that risk, hiding the truth and giving advantage to the few and transferring that risk to the many, to the public? You know, I mean, isn't it a beautiful thing? After all, Jeff Bezos, he needs more fiat cash. What's he doing? He's converting it into hard assets. But Jeff Bezos sells roughly 2 billion of Amazon shares. Yep. Jeff Bezos, founder, sold around 12 million shares of the online retail and cloud services firm for roughly 2 billion, according to a company filing on Friday. That's just this past Friday. Soon after laying out a plan to sell his shares over the next year. So he ain't done selling. That's what they're saying. Okie dokie. I think that's interesting. What do you think Jeff Bezos knows that you don't? Why is he selling all of those shares if things are so great? Because a lot of consumer purchases are based on those shares. But we're getting warned by Wall Street of a .com, so going back to 99, 2000 style concentration in U.S. stocks. This is the MSCI USA top 10 weighting. So that goes back to those 10 shares that I showed you before. This is the .com bubble. This is where we are right now. The top 10 stocks in the MSCI USA command a higher valuation premium relative to the rest of the index when compared to the height of the .com bubble. So they are getting an even larger premium, which means severe overvaluation. And believe me, that can last until it can't. And the key takeaway, extremely concentrated markets present a clear and present risk to equity markets in 2024. So they're selling the individual shares. Are you in your pension, in your 401k? Do you own any mutual funds, ETFs, variable rate annuities? This is more than likely these stocks are in there. How do you feel about that? Especially knowing what you know now. Because how many times can you be lied to when you do not know the truth? And the answer is every single time. And what we don't want you to be is a deer in the headlights, because you will get completely run over. So you want to make sure that your portfolio is well protected with physical gold and physical silver that is outside of the system. It's critically important. So let's look at a little bit of truth. This can easily be managed by Wall Street, right? The ETF, which isn't even real gold. I mean, maybe they're holding some real gold in there, but you have no access to it. Physically backed gold ETFs and similar flows by month. And look at all of these cells. Now, the dark blue is North America, the green is Europe. So you've got the advanced economies that are telling, oh no, you don't need gold. Oh, no, let's sell your ETFs. Will that impact the visible price that you see? Of course it will. It is legalized manipulation, right? I mean, and do you read the contracts? No. Who knows more about this? Take a look, because this is the truth of the gold ETFs. This is relative performance chart of spot gold versus GLD. GLD was designed to mimic and imitate the spot price of gold, which in itself is a manipulation. You can see how it overlaid here, but you can also see how that has diverged and how much the gold ETF is trading below even the spot market, because they sell off their gold holdings to pay their daily fees. You can read that in their 10K report. But you cannot convert these shares into physical gold, so they, in my opinion, are garbage. They are just designed to imitate a manipulated price and can easily be used by Wall Street to manipulate what you see and how you move forward. But the truth of the matter is, whether you're looking at the stock market making new highs or anything else, this is what really matters. This is the purchasing power of the consumer dollar. And what do central banks have? They have this. That's all they have. Easy, cheap, free to central banks. And every time that they do that, the currency loses purchasing power value. But not this. That holds its purchasing power value, proven it for thousands of years over time. The silver kind of straddles two areas, industrial as well as monetary. So it holds, it's just all manipulated. But when you hold it, you own it. And ultimately, this protects your purchasing power. Fiat money products do not. This is more true than anything that Wall Street will tell you. You have the links. This is from the Federal Reserve. Use them, because it's all about hiding the truth of the fiat money. But inflation reflects the true purchasing power value. That's why they like to control the rate and speed of inflation, but the genie is out of the bottle. I firmly believe that we have already started the hyperinflation. And the current CPI data, gosh, that inflation is proving really, 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 really sticky. Goodness gracious, what a problem. So I'm going to tell you, do not be this deer in the headlight and get run over. Properly diversify your portfolio, because if you don't hold it, you don't own it. It is just that simple. And if fiat money buys nothing, does it matter how high the stock market goes? So, if you want to show your support, like this video, leave a comment, Share, 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 because we have to build this channel as rapidly and as globally as possible. And of course, the best way to show your support is to subscribe, give us those thumbs up, and leave those comments. Because together, we can make a positive difference. And so until next we meet, please be safe out there. Bye-bye.